hindsight is always 2020 for everyone, even the Federal Reserve. They recently admitted that they may have made a mistake regarding interest rates. Let's dig in. So, big update out of Philadelphia this week that could impact mortgage rates and the housing market. Fed Jerome Powell made some surprisingly honest comments about what the Fed did during the pandemic and what they might do next. We want to break this down simply so you can explain it to your clients and understand how it might affect your business moving forward. See, during the pandemic, the Fed was basically trying to keep the financial system stable. One of the ways they did that was by buying massive amounts of mortgage-backed securities. Think of those of like bundles of home loans that investors buy and sell. When the Fed buys a lot of them, it pushes mortgage rates down. That's part of the reason we saw rates drop to the lowest levels ever. Now, Powell admitted this week that looking back, they probably should have stopped that buying spree sooner. In other words, they may have already poured a little bit too much fuel on the housing market that was already red hot. But he also said that those purchases may not have been the main reason housing went crazy. Now, we all remember what was happening back then. People were working from home and they wanted more space. Families were moving out of cities, inventory was tight, and buyers had pandemic cash. All that together created massive demand. Now, here's the part that matters for today. Powell hinted that the Fed may stop shrinking its balance sheet soon. Right now, every month, they're letting tens of billions of dollars in bonds run off their books, including up to $35 billion in mortgage bonds. That runoff is one of the reasons mortgage rates have stayed higher. If they decided to pause that runoff, it means that the Fed would stop letting those bonds disappear and start reinvesting that money back into the market. Now, they're most likely not going to repeat the same mistake that they did back in 2020, but this pause could be a signal that they are easing up a bit. That's important. We could hear this announcement as soon as October 29th or maybe even by December 10th at the latest. If they do it, it would most likely put downward pressure on mortgage rates. Now, not a crash, nothing crazy like that, but possibly give enough buyers and refinancers a little bit more breathing room heading into the slower winter months. Powell was also clear that they won't use mortgage bond buying to fix housing affordability. He said that the Fed doesn't target housing prices. So it's not necessarily about making housing cheaper, although that will also happen too. It's about adjusting their policy tools because the overall financial system is starting to feel tighter. Here's what that means for realtors and lenders. First, be ready for slightly better rate conditions. A pause and balance sheet runoff could make rates drift down a bit. That could unlock some buyers who have been sitting on the sideline, and it can also create new conversations with homeowners who might consider refinancing. Second, don't expect 2020 all over again. We're not going back to sub 3% rates. This is more likely the Fed taking their foot off the brake, not slamming on the gas type thing. Third, get ready to pivot fast. Powell said that the Fed will be more nimble moving forward. That means policy changes can happen quickly. The pros who stay informed and explain these moves clearly to their clients will stand out. And finally, inventory is still the big issue. Powell said what we all know, we simply don't have enough homes. So if rates dip even a little, it could bring buyers off the sidelines and heat up competition again in tight markets. In short, team, Powell basically admitted they kept mortgage support going longer than they should have. And they're likely going to slow down how fast they're pulling money out of the system. And that could help ease rates a bit. This is your heads up to stay sharp, communicate clearly with clients, and be ready for a small window of opportunity. I hope that explains what happened back then and also what will most likely happen moving forward. Share this with your teammates so they're in the know, and we'll see you guys next week.